Hey, I just wanted to show the power of a daily low. And also I wanted to show that the best time to get in the market is also a time where it looks so improbable. And this is a trade that I got out at break even, so I mean, it was the end of the day and I don't really like to hold on to them, but it's a daily type of move. And I just thought it would happen in the day, but it turns out it happened the next day. But the trade worked out great, and I just wanted to show you that this is the setup, and it really is in the most improbable times that the market actually chooses to go that way. It sounds crazy, but you can see that this daily picture, this is the daily chart on gold yesterday. It's the 20th today, yesterday. And I took a picture of it because you see that first of all, it's a big move down. I mean, even starting from at the near all-time highs, it's really pushed down. Um, and it comes all the way down to the bottom. It creates the selling wick on that day. And you can see that if this bar were to turn red, it'll break the yesterday's low, and it's pretty aggressive because it was all green at one point. It had to be because that's why this wick's there. It's a very big selling wick. It's a reversal bar in a serious down movement. So downtrend comes up, gets shoved back, turns red. That is pretty bearish, bro. And the idea is it's called a comeback bar prevention. That's what I've named it. A comeback bar is when it shows that high wick and then boom. It's showing that it's a hammer bar. That's what people call it. I call it comeback bar, whatever. And we want to prevent that from happening. We don't want to trade the hammer bar. We want to prevent the hammer. So we actually take longs right now. And it might look, wait, you want to take longs right now, even though it's very close. Look at how close my risk is. Well, yeah, this is the best time to go short. And if you see the time frame underneath the daily, the 4-hour chart, this is what it looks like. It looks like it's heading straight for that low. I mean, that looks pretty bearish, and it shows where it's a big bear bar, comes up and then breaks the red, breaks the bar, turns it red, heading straight for that low. That's when I entered the market. And I just want to say that I think that's the best time to enter the market, where it's just everything's kind of flooding that in one way and just setting all these signals to do something, and you do the opposite, man. You do the freaking opposite. And I wanted to show you the day. So this is the day, and this is what ended up happening. Obviously, I nitpicked this. I have losing trades all the time, but I just wanted to show. I mean, at the end of the day, it's 3 o'clock. I'm posting, see now how these trades worked out because I tracked them. I'm like, again, I see this again. The comeback bar prevention was super strong. It's a wall, a barrier at that low, and it allowed it to push. So that's what ended up happening. Comeback bar prevention happened. It didn't happen the first day, but it did happen the next day. And the trade would have been just fine. And it went 5R. That's 5R. So now I don't know what it would do. That was the move. If you didn't make money on that move, it's over. You know, I would definitely not have my stop at my stop loss now. I would have it at break even at the very least. If not, get out. Just get out. Because I don't know. I mean, longer term, I don't know how far it'll go up. I'm just saying this is a fantastic setup. But we all have fantastic setups when they work, of course. This one just happened to work, and I just see how bearish it looked when I was getting in. This is what it looks like, man. Look how bearish that is. This bottom didn't break, dude. Are you kidding me? This bottom didn't break. Wow. And an indication, just one indication of a bottom not going to break or not, because there's bottoms all over the place, right? When it's an aggressive day, when it's a big selling day. This was a huge aggressive FOMC day, and it creates a big low. And even if it didn't jump from that very hard, it's still a big low. It's a substantial low, especially when the market closes and the volume is just extinguished out of it, and it's just, whoa, where are we right now? Oh, we're on this low. Let's get away from here. And that's what happened, I think, in the overnight session. It just pushed away. But that's the idea. When it's a big low, when it's this low, I mean, this is not a big up move, you know? So this low, this high, sorry, we don't know if that'll be protected. It won't work in every circumstance. The circumstances that we're looking for is big days, big days, big highs or big lows, aggressive bars, way outside of average. This is an aggressive bar. I know that it's outside of average. This sell-off day, very big. So, those are the days that we look for. To protect that. Protect that from continuing, basically, that momentum to continue. Well done. Really cool to see. That's really it. I just want to say, the best times to get in sometimes are just when you least expect it, and that's so frustrating in the marketplace, trust me. I just want to just be straightforward sometimes, but it can be straightforward. Just do the opposite, bro. It's straightforward. Just do the opposite of what it's telling you, basically. It is straightforward. That's just, you're just reading it upside down, you know? We're just reading it upside down there. Hey? Yeah, all right. Peace.